Thank you for always tuning into the Stock Market Update. Today, we are here to bring you the latest stock market news on this 14th day of November, 2023. Stay tuned. Shares of the Home Depot Incorporated, HD, are under pressure, closing at a price of $287.99, marking a price change of -3.61 or -1.24%. This softness in stock comes as the company braces itself for the announcement of its third quarter earnings covering August to October. The primary concerns clouding the Home Depot's performance include rising mortgage rates, sluggish housing sales, and shifts in consumer spending patterns. As a result, comparable store sales are expected to decline for the fourth consecutive quarter. Between 2020 and 2022, the company reaped benefits from consumers embarking on reinterpretations. Historically low mortgage interest rates fostered home buying decisions. However, the current landscape presents a reversal, with mortgage rates hovering at the highest levels observed in the past 2 decades and housing sales plummeting. As for the predictions for the third quarter, the company anticipates a -3.3% decline in same-store sales, with sales in the U.S. experiencing a further dent of -3.7%. Earnings per share, EPS, are projected to settle at $3.76. Sales revenue is expected to land at $37.7 billion, while customer visits and the average sale per customer are predicted to drop by -1.3% and -0.5% respectively. Inventory remains at $24.92 billion. For the full year, predictions include a -3.0% decrease in existing store sales and an EPS of $15.13. It's important to note that even with these predictions, the actual market reaction remains uncertain. Archer Aviation, ACHR, saw its shares rise, with the end-of-day increase of 2.31% to $5.09 per share. The uptick comes after an analyst reaffirmed their stance that among the companies in the electric vertical takeoff and landing (eVTOL) field, Archer holds a leading position owing to its strong cash reserves. The company's target share price has been maintained at $12. Marking a 140% increment from the closing price of the previous week. Yet, Archer's stakes have seen a significant leap of nearly 170% since the beginning of the new year. The company anticipates commencing commercial flights for urban taxi transport services by the year 2025. In a recent statement, analysts mentioned being continuously heartened by the initiation of flights for Archer's eVTOL Midnight, and the company's progression towards pilotless flights is maintaining the bullish view. Within the eVTOL industries, Archer Aviation and Joby Aviation (JOBY) stand on par, whereas vertical (eVTL) requiring capital accumulation trails behind, making Archer a more preferable choice. The company's cash balance remains steady, warranting a stable capital transition for the foreseeable future. All in all, Archer possesses sufficient capital to function for approximately 2 years. This financial robustness is expected to be further bolstered by payments from the U.S. Air Force and deposits from customers. Alphabet Incorporated's Google has been paying 36% of search ad revenues obtained through Apple's Safari to Apple, disclosed Professor Murphy from the University of Chicago during his testimony at a Department of Justice (DOJ) antitrust lawsuit in Washington, reported by Bloomberg. The contract is being targeted by the DOJ, arguing that it serves as concrete evidence of Google's illicit maintenance of dominance in the search engine and search ad markets. The partnership between Google and Apple has been in place since 2002, with Google playing the role of default search engine on Apple's Safari. Nevertheless, the details of their agreement have been closely guarded by both companies. Google argued in court documents submitted last week that making additional details about this contract public would unjustly harm its competitiveness in its relations with competitors and other transaction partners. Despite Alphabet's claims, the DOJ has been closely monitoring this contract, viewing it as one of Google's most significant default agreements, especially given that Google is the search engine on the iPhone, which is the most widely used smartphone in the U.S. The current scenario puts the spotlight on the dynamics of the tech industry and raises questions about the transparency and competitiveness of such partnerships. NVIDIA Corporation, NVDA, continues to experience a rising trend in its stock price, currently sitting at $488.47, marking a 1.06% increase. Today marks the 9th day of consecutive gains for the company, even reaching prices within the $490 range during the course of the day. This steady increase indicates a movement towards reaching the all-time high trading price of $502.66, which was recorded back in August. In light of recent developments, NVIDIA has launched a new artificial intelligence chip and has pledged significant enhancements in performance compared to its traditional models. Analysts indicate that NVIDIA's new AI chip, the H200, is, in fact, the company's first graphics processing unit equipped with a PMI memory. This latest edition proffers a larger bandwidth and capacity, underlining the critical role of memory in handling next-generation AI workloads. Closing the day with gains would establish a record for the longest consecutive increase in stock prices since December 27, 2016, when an uptrend lasted for a total of 10 days. The current 9-day increase streak has brought about a nearly 20% rise in stock prices. NVIDIA Corporation, known for designing and selling graphics processing units for gaming and professional markets and system-on-a-chip units for mobile computing and automotive markets, adds another feather to its cap with its foray into AI computing. Riding on a stream of positive news, Tesla Incorporated, TSLA, shares continued to make steady gains, improving by 4.25% to reach $223.77. With today's uptick, the stock has returned above the 200-day moving average, drawing investor attention towards its future performance. The Financial Times reported that the Indian government is mulling over Tesla's request to cut import duties on electric vehicles, EVs. The proposed tariff reduction under deliberation stands at an all-inclusive 15% on EVs across price categories. However, it has been pointed out that no final agreement on this policy shift has been reached within the Indian government. Conversely, despite the potential boon of tariff reduction, concerns continue to cast a shadow over Tesla's prospects. The EV market has not grown as much as anticipated, and with increasing price competition, analysts are apprehensive about the future demand for high-end vehicles. The expected economic downturn next year could notably stifle demand for Tesla's more expensive models. Shares of Tyson Foods Incorporated, TSN, traded downwards despite reporting a Q4 earnings per share that surpassed expectations. The company's revenue for the July to September quarter fell short of the forecast, but the per-share earnings topped the estimate. These events transpired despite Tyson having to record an impairment charge of $330 million in its beef operations during the period. This provision for a decline in the value of the beef business was primarily pinned on worsening macroeconomic conditions, with rising interest rates at the forefront. Despite the earnings beat, net income tumbled by 77% on a year-over-year basis. Tyson's CFO attributed the beef impairment to these mounting macroeconomic challenges. Forecasts for the fiscal year 2024 have been announced, with the revenue outlook standing almost unchanged in comparison to the fiscal year 2023, failing to meet predictions. Operational profit expectations also trailed below the estimate. Companies like Tyson are battling straitened circumstances as the number of cattle available for processing to produce beef within the United States has dipped to a 10-year low. Meanwhile, the acquisition cost of feeder cattle has escalated for the third consecutive year, exerting pressure on profits. Although selling activity dominated after-hours trading, buying activity initially outpaced during regular trading. However, followed by an initial round of buying, sellers regained their ground and the stock dipped. Tyson Foods' refined strategy on cost management and capital allocation did not manage to outweigh these ongoing market challenges. This market action follows a string of earnings announcements, with Tyson Foods' adjusted earnings per share coming in at 37 cents, beating an estimate of 25 cents. In contrast, revenue for Q4 was $133.5 billion, trailing behind the forecast of $137.1 billion. Sales volume saw a decline of 0.6%. Segment-wise, there was a 6.7% decrease in beef sales, underperforming the anticipated 5.7% drop. On the brighter side, poultry products registered a 1.7% rise, bettering the 1.1% increase that was projected. The shares of Plug Power Incorporated, PLUG, are experiencing a continued decrease, currently down by -3.82%. The downward trend is an extension from the prior week, sparked by the company's revelation of substantial doubts about its ability to continue its operations due to a shortage of cash on hand. This disclosure promptly triggered a sharp drop in its stock value. Today's market scenario is also impacted by an adjustment in the target stock price, with analysts reducing their evaluation from $9 to $3.50. They foresee continued pressure influencing the company's valuation until there are signs of improved liquidity. Over the next 3 to 4 months, it is crucial for the faith of the investment community to be restored regarding the feasibility of the company's business model. Plug Power Incorporated is a company devoted to crafting reliable, efficient, and economically viable products, systems, and services linked to fuel cells. It extends its hydrogen and fuel cell systems to power electric motors in markets like electric mobility and stationary energy, fostering sturdy relationships with customers who lay emphasis on zero-emission power solutions. Shares of Monday.com, MNDY, an Israel-based operational management software provider, experienced an uptick with prices ascending to $151.45, accounting for an 8.08% surge. This surge followed the pre-trading announcement of encouraging Q3 earnings, July to September, exceeding not only earnings per share expectations but also the projected revenue. The company simultaneously released its guidance and projected an upward revision in its annual revenue outlook. MNDY's CFO, Glazer, voiced immense satisfaction with the extraordinary performance in Q3. Marked by robust revenue growth, a noticeable expansion in profits, and the generation of cash, the third quarter came through as quite delightful. The company was successful in accomplishing both its short and long-term goals, pushing for efficient growth while simultaneously expanding operations. On the figures, the adjusted earnings per share came in at 64 cents, overshadowing the expected 19 cents. Revenue also surpassed the anticipation, recording $189 million against the projected $182 million. Highlights for Q4 include projected revenue ranging between $196 million and $198 million against the expected $195 million. The adjusted operating profits are expected to lie between $7 million and $9 million. Culminating on the full-year outlook, the revised estimates for revenue extend from $723 million to $725 million, upgrading from the former $713 million, $717 million, and superseding the expected $715 million. Monday.com stands out as a provider of module-based operational management software that fosters the core functionality across various organizations. The proprietary platform designed by the company enables integration with other systems, promoting a much easier and quicker digital transformation (DX) for the customer firms. This platform also enhances operational efficiency and productivity while improving organizational agility and facilitating a unified working space across departments. Shares of Aclaris Therapeutics, ACRS, saw a massive drop, leading to a share price tumble by a staggering 87%. This steep decline materialized following the company's announcement of unsatisfactory results from their ATI-450 RA202 Phase 2b clinical trials among rheumatoid arthritis patients. The trials did not meet either primary efficacy endpoint, ACR20, or any of the secondary endpoints by the 12-week mark in patients that were administered 20 mg or 50 mg doses. Furthermore, no significant difference was discerned in any efficacy endpoints between zunsemetinib and the placebo at week 12. Aclaris also confirmed halting future development of the zunsemetinib program and discontinuing registration for ongoing Phase 2a trials, focusing on arthritic xerostomia. These revealed disappointments cast a shadow over Aclaris' share value and investor sentiments. Aclaris Therapeutics is a biopharmaceutical firm dedicated to unveiling novel therapies focused on skin and immune inflammatory diseases. Their products encompass treatments like hydrogen peroxide topical solution Ascata and oxymetazoline hydrochloride cream Rhofade, designed to treat afflictions like seborrheic keratosis, benign skin tumors, and facial erythema ensuing from rosacea. Please don't forget to like, subscribe, and share. Your support means a lot to us. If there's any information you'd like us to cover, feel free to leave a comment below.